If you clicked on this video, you're going to get the number 2 investment of 2026. And of course, it has to do with AI. It's not number 1, it's number 2, and I'm going to tell you why. The AI revolution isn't slowing down, it's exploding, and it runs on one thing: the unstoppable power of advanced chips and memory. We're talking the silicon backbone that's making intelligence absolutely infinite. First, we have what everyone has come to know and love, Nvidia. It's cutting-edge GPUs, which are dominating AI training and inference, crushing massive neural networks at unprecedented speeds. Nvidia fundamentals make it a must-hold for your portfolio. Next, we will unpack Taiwan Semiconductor. TSMC is the world's premier foundry, and it's basically a monopoly, cranking out these next-gen chips with massive 50 billion plus CapEx expenditures fueling the AI boom into 2026 and beyond. Then we look at Micron Tech. Micron is an American company, and it's the underdog here. However, it's riding the memory supercycle. Its high bandwidth HBM is sold out through 2026, which powers Nvidia accelerators, while prices surge amidst these shortages. Finally, we'll see if AMD is a good investment. They're closing the gap fast with efficient AI solutions, bringing fierce competition and innovation to the table. This isn't about one investment. It's about the industry. However, I'm going to break down which investments look the most attractive within this industry. We're about to unpack the technicals and fundamental data to show why this is my second highest conviction play for explosive growth, not only in 2026, but for the long term. Welcome to the number 2 investment of 2026. I started off this number 2 video today, the profile of this video, giving you guys my stocks that I'm heavily considering or have in my portfolio already. I have Nvidia, I have Taiwan Semi, I have Micron, I don't have AMD, and there's a couple other stocks and an ETF that I want to talk about that I don't have that I'm thinking about adding. But to make this a little bit more concise, I'm going to go over Taiwan Semiconductor today and Micron today, but I'm also going to go over all the stocks that I mentioned back to back to back in a comparable, okay? Because I believe that this is the fundamental way to dissect what I want to own and when I want to own it. You know, when is the fundamental multiples are in my favor, what and why. I can also explain how ROE, return on equity, and debt to equity can tell a story of a company's debt. Now, when we talk about debt to equity and return on equity is more of an efficiency measure, whereas debt to equity is how much debt the company has versus how much equity the company has. And you can examine debt to equity that way. I don't necessarily look at debt as a bad thing. Too much debt is a bad thing. Too much equity is a bad thing. So I wanted to debunk some of those myths here. But first of all, let me get right into it, where in AI, my largest holding within my AI portfolio is Taiwan Semiconductor. And there's a big reason for this, okay? First of all, Taiwan Semiconductor is like a monopoly on chips. It's set to invest 52 to 56 billion in 2026, so that's a lot of money. Despite challenges from traditional sectors, or despite the supply of chips being available, Taiwan Semiconductor anticipates 30% revenue growth driven by insatiable AI demand and significant global market investments. So I would put this stock probably as number 1 in my AI portfolio because I like monopolies. Nvidia is basically a monopoly. Basically, China has their own Nvidia, okay? China has China Nvidia, which it doesn't need Nvidia chips. It's talked about that. So that's why I put Nvidia number 2, just because China is a 1.4 billion person market, huge capital investment in AI, and they don't need Nvidia. So that tells me something. So Nvidia is not the only one out there that's competing, but Taiwan Semiconductors are. They're like 95% of the total market, global market. So that's why they're my number 1. I'm also got a position in Micron, and I'll tell you why. Well, Micron is experiencing strong growth driven by demand in AI and memory solutions. Analysts are optimistic with price targets reflecting significant upside. That's great. The 1-year chart looks extraordinary. So I'm not going to really get into technicals too much because all these charts look good technically. But I'm going to get into some comparables that are going to tell you, oh, well, this looks good or that looks good compared to the other company. Micron is set to acquire a Taiwanese chip fabrication site for $1.8 billion. Okay, so CapEx, capital expenditures to mergers and acquisition costs. So basically, the industry is growing leaps and bounds. Everybody in AI is winning because everybody in AI wants to develop more AI. So this story of AI is going to have legs at least through 2026. And I would say 2027, it's the biggest thing. Now, there is going to be a bubble in AI eventually, but I don't think that I'm ready to call that top right now. I see too much capital going in. And if capital is going in and it's used efficiently, that's the catch. And it's producing growth, revenue, and gross margin, net earnings, then we are safe. And so I wanted to spend most of the time here, and I want to make it quick. I don't want this to go too long, but I want to spend most of the time looking at some of the. If you follow my channel, I look at TA and I also look at FA, and I spend some time on PE ratios, and I look at the PEs of Nvidia and Taiwan Semi. They're pretty low compared to the average industry standard, right? They're the two biggest companies. I mean, the biggest in the world right here. And it's historical PE. And this is what really matters. Their forward PE is even lower. And so that makes it a very good, look at these two together here. To give you an example, the S&P historical average PE is like what? It's like maybe 19. And that's the S&P 500 companies. These are not, S&P 500 are not super hyper-scaling growth AI flex companies. Palantir has like a 500 PE. Tesla has like a 250 PE. Those are PEs I wouldn't touch. But these, I mean, my goodness. Yes. So AMD, Advanced Micro Devices, has 122 PE. That's a little bit strong for me, but that's historical. We look on a forward-looking PE or a forward price to earnings based on their forward earnings estimates that they're going to report in the future. It doesn't look too expensive, but it's coming at the average. And the market cap is $377 billion, which is like 1/10 of Nvidia. So basically, there's a lot more growth to be had in AMD based on earnings, based on if you have a high market cap like that, what can you expect? Maybe a 2x, 3x in the next 3 years? $10 trillion company? I mean, it's in the realm of possibilities, but you don't expect Nvidia to grow that much. I'm just talking relative, right? Relative basis, their PE is good. Micron is the deal. As I said in the introduction, it's kind of like the dark horse. 11 PE forward, that's extremely cheap. So I'd be going after Micron at $410 billion, which is 1/10 of Nvidia's cost. This is worth what their company is worth, okay? And somebody told me to look at other ratios. So other ratios that I do look at, not so often. I like price and I like earnings because earnings drives value. In other words, earnings makes things go up. So I like price to forward earnings. I also will look at ROE because ROE tells you how much net income NI over their total equity. In other words, an efficiency measure here. How are they using their equity efficiently? Are they satisfying stockholder, stakeholder interests? Well, Nvidia, yes, they are. And when we combine that with debt to equity, we get a really cool story of, now I'm not against debt. Debt is cheaper than equity, cost of capital wise, it's cheaper. I'm not against debt, but Nvidia has a really low debt to equity, which means its debt is very low compared to its equity. And it's using equity very, very efficiently. Extremely well-run company that says, okay, we're worth $4.35 trillion, but we're still doing things right. And Taiwan Semi, it's not as profound as this. They're also using equity efficiently, a 2-to-1 here, but it's not a 10-to-1, right? But Taiwan Semi is still my number one. Just look at that CapEx. I mean, CapEx represents growth prospects. Think about it. Capital expenditure into what? So if I'm going to invest in like a house, I'm using my my resources to build that house. That would be my CapEx into the infrastructure of that house. If I want to build 10 houses, I'll need a bigger CapEx. And that's exactly what Taiwan Semi is committing to. So that is what's raising my awareness to adding more Taiwan Semi versus Nvidia. It's got 1/4 of its market cap, but it's a global monopoly. So I would say Taiwan Semi number 1, Nvidia number 2, Micron for the value play. Look at that. Juicy 410 billion market cap versus 4.3 trillion and 1.69 trillion. Now, I did include an ETF, SMH. We'll come over here and look at it. VanEck Semiconductors, and let's come down here. Yeah, I mean, there you go. The two stocks that I love, 30% of their portfolio. But again, Micron, AMD, right? ASML, another good one. I just don't have time to talk about these, but Qualcomm, another good one. Small cap that I want to cover is IREN. The PE multiples are very high, so beware, do your own research. This is not financial advice. I'm not your financial advisor. I'm just sharing with you some free entertainment content, okay? Kramer is bearish on it. That makes me bullish. I like it. IREN. The chart of IREN, let's look at it from a technical perspective only because the fundamentals are all whack. Cheap, huge beta, PE ratio. That's a historical, by the way, 31. Pretty okay, actually. And yeah, it's gone up 5x in 5 months, 6 months, 7 months. So what? Kramer hates it. I like it. Okay. I'm not adding it to my portfolio, though. I just am raising your awareness on it. In SanDisk, huge event-driven move, good outlook for the future. Right now, it has negative earnings, but it's forecasted to have positive earnings in the future. Oh, and one thing I want to bring up with Micron that I didn't bring up is that whenever insiders are actively buying stock, like on the open market, that's a really, really good thing. That's going to be it for the show today. Final words. I love TSMC. I love Nvidia. I love Micron. Don't have so much love for AMD, but I do love this shaking my head SMH ETF that has them all, and they manage it for you, and it's a very low load rate or expense rate. So, instead of buying these yourself, you can just buy the SMH shaking my head ETF and call it a day. And they do pay, some of these do pay dividends. Let's see. Taiwan Semi, dividend. Nvidia, small dividend. Advanced Micro, no dividend. Micron, dividend. There you go. Thank you for watching. I hope you enjoyed this number 2 video, and I'll see you for number 1. If you've been following me, you'll know what number 1 is. It's an adjacent on AI. So that will be released sometime in the future when I have time, because right now I'm covering IBRX. IBRX is mooning. It's a biotech company that I own. That's it. Thank you very much for tuning in, and I'll see you in the next video.